Hi everyone, I'm Ken from Crypto Trading KS and the CTKS method. If you watched the video all the way through on yesterday's video, you would know exactly why the markets came down like this. And you would have been prepared. Jackson Hole and what the Fed does is in tight focus at the current time. The Fed is getting ready to cut interest rates, and when that comes, if the interest rates are too great, or for example, if you get a 50 basis point decrease in the federal funds rate, that will be a substantial problem, as professionals will interpret that the Fed has broken the economy. Unfortunately, if you're looking towards the mainstream media to just help you understand what's going on inside financial markets by looking at financial market news, you're going to go nuts. Yesterday, this was the headline: BlackRock's iShares Ethereum Trust approaches $1 billion in net inflows. And what is the headline today? Spot Ethereum ETFs record the longest outflow streak amid drying investments. Ouch if you went into Ethereum in yesterday's price action reading that news headline. Therefore, we need to move past news headlines and we need to move somewhere else. But what and where? I'll cover off completely different ways to look at the financial markets, not only the crypto market, but the stock market and Forex as well. Let's run the numbers. One of the most important things that you can keep your eye on at the current time is the probability of a 50 basis point decrease in the federal funds rate. 3 days ago, it was 23%. 2 days ago, it was 32.5%. Yesterday, it was 38%. Now, this revision of the employment data was a big shock to the markets. Now, what is the percentage today? You would anticipate it's higher. What is it today? It's lower. What you will find inside financial markets, it's important, if not vitally important, to not follow the crowd. Instead, you need a signal focus and literally become independent from the news. The news is mostly, not always of course, mostly noise and hype. And you can see it changes day by day. Hot today, cold tomorrow, hot the next day, you'll just be left crazily, just running around in circles. But the way to get out of those circles is to understand the structure and the intercorrelation and interdependence between different asset classes as measured through their charts, and always taking a three-dimensional risk management perspective. Three-dimensional risk management doesn't come easy. We're just programmed to either turn the light switch on or turn it off. We're not programmed to think in terms of 3 dimensions. Will the markets come up? Will the markets flatline? Or will the markets come down? Typically, people want to pick one of them, but we understand inside our community that things can go all over the place within the span of 24 hours. And of course, if we zoom out longer, then they can go absolutely crazy, especially inside crypto. This particular fractal has been under our analysis for quite a few weeks now. This is the C19 sell-off and the US liquidity crisis. If we follow this fractal, we could get a sizable reduction in price. Now, what does that mean? That means there's going to be huge bargains. If you're running away on the red, you would have run away on the red here too and not taken advantage of the green. We absolutely love the red. The red is what we borsog. What the heck is borsog? Borsog comes from rule 621. Buy on red, that's the bor. Sell on green, that's the sog. Borsog. And that's our famous Borsog eagle, who is named Borsog. Borsog is a pretty good character. What he does is always looking towards the right. He's always pointing towards the right, looking towards the right, because that's where price will get hit structurally. Borsog excels at looking at structural resistance and structural support levels. Knowing how strong they are, knowing where they are, is the most important thing. Unlike normal statistical indicators, Borsog is forward-looking. He's future-looking. He literally looks into the future with this X-ray vision. He knows where things are cooking. He's not interested in complicated chart patterns, only structure, because structure tells you the truth. And because structure is always moving between structural resistance and structural support and back to structural resistance, we know that all price moves in a wave. In order to master financial markets, you must understand price is moving in a wave if it's in an uptrend. If it's in a downtrend, it's always moving in a wave as well. Downtrends don't just go down, they go up as well, and then they go down, and then they go up. Therefore, we must think in terms of three outcomes: a down outcome, a neutral outcome, and an up outcome. So, what are we looking at? Yesterday, the market was relatively flat, and it would be very difficult for most trend trading systems to actually profit. But with Borsog can profit, and I will show you later how I turned several $1,000s of profit in yesterday's price action, which was basically flatline. The most important rule that you can ever learn is only knowledge creates profit. This is true in life as it is in financial markets. And I thought you would like to see it here. Here is rule 1 with our good friend Borsog leading the pack. In yesterday's video, I explained that it was really important to keep your eye on the S&P 500, the Nasdaq, the Dow, and also the Russell, as it would give you an indication as to the way that main markets were heading and therefore the crypto market. This knowledge is not just a knowledge of structure itself, which determines price waves, those up and down movements, but it's all about intercorrelation and interconnection. I also mentioned yesterday it was important to look at the structural levels across these different charts. If you were doing the structural analysis, you know that at the point of the recording of yesterday's video, we saw a bit of a downtrend and then we found support and then we flipped up. But we saw a continuation of weakness. Basically, people suggesting that Bitcoin would close out around the B level. Well done. It was very close to that. Well, you could say it was around B. If you listened to the news, you probably said it would be around C. C or under was down there. There was tremendous negativity inside the market, and with this cascading sell-off, people would just justifiably think it was going to come down and down and down. Instead, it reversed straight back. And then it came down, only to do that wave-based function and move up. The reason that I wanted you to look at the S&P 500, the Nasdaq, the Dow, and the Russell is because there's a directional correlation between those major indices and Bitcoin. Bitcoin is the blue line. What you can see is as the main market got more and more fearful, and we'll come to the VIX in a minute because that's one thing that I really want you to pay a lot of attention to at the current time. When the markets got fearful, it pulled down risk on sentiment. So everything went risk off. People started to sell. Now, what have we seen from that particular point onwards? We've seen a bit of a recovery, potentially even a cut over. We may have some positive momentum, but you just must be aware that if we don't get to certain levels and reject, and if we don't get to certain levels and find support and go forwards, there will be a potential for more weakness inside the market, but you can still make money. Yesterday, I'll just give you the trades from yesterday that I just did on one token, but I just want to give you a little bit more data first so you can get inside my mind. I was fully aware that the VIX was doing a cut over here and a potential buy arc. Now, a buy arc, what it basically means, or a BA inside the masterclass, when you get buy arcs, the VIX can go very, very quickly up, and that can tank Bitcoin down. Bitcoin is that blue line, always the blue line. And when you consider a big spike in the VIX, if we get one of those, we would anticipate that Bitcoin, and of course all of crypto, because no alt can escape Bitcoin's gravity, they would all get hit and come down. So therefore, I was paying attention to this, and if you've been looking at the structural levels on the VIX, you already know something that other people will have no clue about whatsoever. That is, a fair value gap is developing. What that means is the price can move up very, very quickly. In other words, the VIX could move up rather sharply. And when the VIX moves up, guess what is happening to crypto? It's moving down. All of the time, I see this on X/Twitter and other social media. They say, what the heck happened to Bitcoin? Who's selling their Bitcoin? It's intercorrelation and interdependence. One thing also, which would have mystified so many people in yesterday's price action, why did the DXY come up with all of that revision to employment and the potential to have a greater than 25 basis point decrease in the federal funds rate? If you know the structure in here, in other words, if you have the structural indicator for the DXY, which is from CTKSMethod.org, you already understand that the DXY came into so much structural support, it had to bounce, and that's exactly what it did. We want to see two things. Thinking from a three-dimensional perspective, we want the VIX to come back down, and also we want the DXY to come down and also yields to come down. If those three things happen, the stock market will rally, bond prices will go up, gold will do well, and of course crypto will do well, with Bitcoin leading the way. Therefore, it is wildly important to keep your eye not on just the highlighted ones I have here, but all of them through the cheat sheet. You want to know the structural levels across the Tier 1, Tier 2, and Tier 3 charts. If you do, you can see, like literally looking into a crystal ball, what is going to happen. When looking across the crypto space, one of the reasons you must understand what Bitcoin is doing is because it will play out on all of the alts. Tron is a little bit of a basket case. Tron goes with Bitcoin and goes against it, inverts it, and then aligns, and it does all sorts of strange things. If you're good with Tron, please let me know in the comments, because Tron is a very interesting animal. But we do know one thing for sure. No alt can escape Bitcoin's gravity. If Bitcoin is going up, the alts are going up. If Bitcoin is going down, the alts will come down. Not necessarily to the second, but pretty much so. Sometimes we get the alts overextending Bitcoin's gravitational pull. That shows strength. That's what we want to see. But in all, you must understand what Bitcoin is doing, because if you don't, you will miss all of the opportunities inside the crypto market. And don't forget, some lag and some lead. And you want to pay close attention to which is which. I'll get into the trades that I did in yesterday's price action, but I just wanted to revisit the A, B, and C. The A is up there, believe it or not. So there's the A there. So when we were looking at price action, we were here, we got a bit of a sell down and a gravitational attraction back up into all of this structural overhead resistance. Now, you know what caused that, because the indices did well, and then they got crunched when the VIX started going up. There's an inverted relationship between the VIX and risk-on assets. If the VIX is going up, literally risk-on assets are coming down. That's why I wanted you to look at the VIX and make it a focus, and also the DXY. In the next 24 hours, at the time of this recording, Bitcoin was 60,828. Do you think we're going to basically go flat again? Or do you think we're coming up to A, or do you think we're coming up to C? Retail sentiment would say we must be coming down to C. Must and are completely different things. And remember, this volatility inside the market is what I traded yesterday, and it would be very, very difficult for trend trading systems to make any real money out of this price action at all. The vast majority of people cannot trade sideways price action. And thank you very much to Purpuratum for your very kind comment. CTKS structure is a game changer. In order to do my trades, I always look at CTKS structure, not just at the chart that I'm trading, but across the Tier 1, Tier 2, and Tier 3 charts. Yesterday, I did some trades on Binance Coin, BNB, and you can see for the day, in terms of the last 24 hours, it was really up, not much. So you would anticipate not much profit could be made from BNB yesterday. In actuality, I made US $2,800, which translates into Aussie dollars $4,200 by buying and selling, just turning over different levels and then reinvesting. This is what we do inside the masterclass. We look at how we can rotate our money in and out of positions. Now, you might not be coming in with this degree of commitment inside the market, but just remember, we were talking about a potential $48,000 Bitcoin, and I was going in like there was no tomorrow because I let structure be my confidence. Having been inside financial markets for nearly 4 decades, and of course doing a finance degree myself, I want to just help you to understand how you should look at price and profit. If you can make a $25 per day profit on average, that may mean some days you make more, some days you make less, some days you don't make anything. That's cool. But on average, if you made an on average $25 per day profit across the span of a year, you make $9,125. If you were going to Commonwealth Bank and just investing in their net saver, and just be aware you only get the bonus interest for 5 months, not for 12 months. What you actually get if you leave it for the 6 months is it drops down to 2.35%. Pesky banks. This is pretty common. Banks will give you an introductory rate. They say it right there. It's introductory, but you can't have it for long. And let's have a look. If you were making 25, you can see that if you were at this 5.1% for 12 months, and we know that that's not going to happen. You could either learn how to trade or put $178,922 into the bank, and therefore you would get just staggering interest of $25 per day. And if we were a little bit more realistic, we'd just take that base rate, the standard variable rate, and use that 2.35% to get your $25 there. Same data, just different interest rate. You would need $388,000 to get that $25 a day. Therefore, if you're making on average $25 per day through your trading, congratulations. That's almost like you have nearly $400,000 sitting in the bank. But you're being active and you're taking just control of your financial future. But what if we did something, say, $100 a day? You would need about, nearly $750,000, but that would make you $36,500. So let's have a look here under a more realistic scenario. You need about $1.5 million to get $100 a day in bank interest. Now you saw in the last 24 hours I did $4,200 worth of profit, and that means that if we had this 5.1% variable rate, not for 5 months, but for 12 months, I would have needed to put $30 million in the bank in order to get that daily interest. And what about if it's the standard variable rate? Oh, guy, caramba, $65 million. This is why people are so just over themselves with crypto. It's so exciting. Crypto is so incredibly volatile. If you have the knowledge, you can do really, really well. But one of the things that you've got to be aware of, start small and scale. If you're starting big and trying to just get these profits without knowing what you're doing, you'll end up blowing up your account. You need to start small. You could just literally use this as a scale. Well, not that 4,200, just up to 2,500. You could say, I'm just going to go for $25 profit today. And then if you get that 25, see if you can make it 50. And if you get that 50, see if you can make it 100. But just have a constant rate 25 per day. But the one thing that you really need to remember is rule 1 is so solid. You must have knowledge to create profit. If you're just hoping, guessing, praying, gambling, those things won't make you profit. They'll make you lose a lot of money. Please let me know in the comments, where do you think Bitcoin is going today? Because this is the entire crypto market we're talking about. Do you think it will end up around B? Do you think it will go up to A? Or do you think it will come down to C? please let me know in the comments. It's a very powerful thing for you to do each and every day. It will just help you to think in terms of 3 dimensions and in terms of wave-based function. And that's what you're going to need if you're going to be profitable inside financial markets. And if you would like to get some more knowledge, Joe has very kindly offered a partial masterclass scholarship. Your name could go here, and it's one of the most highly awarded masterclasses out there. From yesterday's comments, many thanks to Mark. Mark said, after 4 years following and completed the masterclass, I can only wish this to another person. What a beautiful thought. And what Mark says is so true, but it only works if you take the example of the professional mindset in today's video. And don't forget, go slow to go fast. Start with a 25 and build your way up. If you'd like to pop across to CTKSMethod.org, you can subscribe to our newsletter that is coming soon. It's absolutely free. If you're interested in that partial masterclass scholarship, please reach out to me and directly message me on X, or you can contact me at ctksmethod@gmail.com. And if you're interested in looking through the Tier 1, Tier 2, and Tier 3 structural levels, which I suggest is incredibly important at this stage of markets, you can find them at ctksmethod.org. Have a fantastic day or night ahead, my friends, and Kate and I wish you a beautiful weekend. Bye for now.